Alright everyone, in this video I'm going to be going over my structure analysis, my higher time frame bias and liquidity purge, my POI selection and identification, my confirmations trigger, and everything else that I do to trade the markets every single day. You guys know that I trade a swing trade, base strategy, and a scalping strategy. So what I'm going to be doing now is going over to a random pair that I have not looked at, and I'm going to be doing the analysis from start to finish. So let's go over here to the right. We're going to be going to forex, and I'm just going to be scrolling up and down and just pause on a random pair, and let's see what we get. Okay, so NZD/USD. I've not looked at this pair in a while. As you can see, there's no analysis being done. And we're going to be going over my entire analysis from start to finish so you can get a better understanding of what I do every day. I always start with the highest time frame that I have, which is the monthly. And when I'm concerned with the monthly chart, I am not too focused, besides identifying the major swing points, on what has happened many months back. Okay, I'm more so focused on what's currently happening, which is what we should be concerned with, because we're going to be looking to execute trades potentially today, this week, or this month. So I don't want to be too concerned with what happened in 2002. Now, when I look at this monthly chart and I zoom in, I'm not really planning for POI selection, and more so I'm focused on understanding the market structure that I'm getting from this. So the first thing that I see, once again, and even though this is, yes, many months back, we do have a break of market structure to the upside that then resulted in this bullish push. This is a potential higher low, right? If we're following the structure, this may very well become a higher low point before we go ahead and make a new higher high, but that is yet to be seen. Okay, that's the first idea that I'm seeing. Nothing that I will subscribe to as of now, but something that I'm considering. I'm taking information from many different angles. Now, the number two thing that I see is that we failed to create a new higher high over here. Hence, we have a new lower low, right? So we have this break in market structure to the downside. Break in market structure lower with a lower high, lower low, potential lower high that may lead into a new lower low below this low over here. So that's the second story that I'm seeing, and you can see that those are conflicting stories. So as of now, now we're focusing and looking at the most recent candles on the monthly, and well, they're obviously ranging. There is a fair value gap here that we may see some relevance in, and we have a compelling pool of liquidity waiting below market. We can clearly see that we have relative equal lows. We do have relative equal highs here as well, but this is the most obvious one, which may lead to the market going lower. But as of now, once again, this is just the monthly. We're just getting started. Let's jump into the weekly to get some more perspective on this. And now things are starting to make more sense, right? The most recent weekly break in internal structure is over here. This is our internal structure being broken right there, right? We have this sequence going on now, and we could expect that this kind of action is going to carry on lower on the weekly. So many conflicting thoughts. But as of now, as we said, the weekly and monthly, we're not really trying to understand where is the market going to go next. We're more so concerned with what has happened in the past. How is the market structure looking? Are we in a range? Are we in a push? Are we in a trend? That's everything that I'm trying to answer for myself. And I can see that, yes, we have some bearish structure developing with a compelling liquidity pool lower, which may mean bearishness, but more so we're consolidating, and the market could really break up to the upside or break down lower. So once we jump into the daily, this is where we're really trying to get specific now. Okay, so let me quickly remove all of this because we're not going to be needing it now. And we're going to be starting fresh. This is where I really want to see a recent break in market structure, order flow being mitigated, and things of that nature. And this is really what I see going on now. This has really jumped to my eye quickly. Look at this. We had an obvious liquidity pool of highs here. You can clearly see that we have relative equal highs here. We've tapped into what I would consider the breaker over here, right? We've tapped the breaker. This is actually very interesting. We have broken structure to the downside right over here. Break of structure lower. We have created a new lower low, which we can denote swing points as such. We have retraced all the way back to where? To the origin block where we last mitigated order flow, and we're moving lower. So if I would have seen this market as it's moving up here, that would have been a great opportunity to be looking for a short. Why? Because we have a liquidity pool here, a fair value gap being filled into the breaker, a reaction to the breaker lower that leads into a new lower low that we can see over here, and a pullback to the origin block. So that's quite interesting. Where do I think this is going? My next row on liquidity, the way that it is looking, would most likely be this low that I would be looking to take lower. Now, is that guaranteed? No, it is not. So what I'm going to do is denote the areas where I could see the market pull back into that would indicate that I would need to short at. More than likely, that fair value gap is interesting, right? Let's see if I have what I'm looking for exactly. This to me represents that I'm going to be looking at this area for potential confirmation to be going short. Let's jump into the 4-hour quickly. We can still see that fair value gap. We're going to be refining it slightly. And remember that we're wanting this area to be fulfilled. Now, we also have an internal break in market structure higher here. That's interesting to mention. We're moving into discount when we're looking at this leg from low to high. Anything below the 50 is discount. You can see how the market initially tapped into the 60 and rejected all the way higher. And once again, that is a trade that you could take for about 90 pips. But nonetheless, we have a break in market structure to the upside. I would consider this breaker block as a potential area to be paying attention to. Apart from that, it is below daily's ATR range, so that is phenomenal. Although the structure right now, we are getting a complex pullback that is looking like this, and it is important that you take the time to label your chart. So I'm going to be doing that exactly now. Let me see if I can do this over here. So let's see, I would denote that as such in red. We're getting this internal structure here building. We're now creating a new lower low, which ideally we want to see it into the breaker for a potential long opportunity with the appropriate confirmations, obviously. I'm not going to be blindly taking this trade, although I do believe there is a high degree of probability that we could tap into the breaker and see a pullback at least into this candle over here, which is a order block type that I might cover in a future video. But this is something that I would consider. It's also in between of a fair value gap, more than likely will reach for this naked wick that I'm going to be denoting over here. So that is an area that I would be interested in doing business at. This is nonetheless our ultimate target based on the daily and the bearish pressure that is building up. Once again, if we go through this rather quickly, we've tapped into a higher time frame POI origin block over here that led into a new swing low. As you can see, we would then look right deeper into the structure. We see that we're building bearish trend. If we could create a new lower low here, ideally we want to see it push here. This is a important decision point whether we're going to see it reject here and go to the liquidity pool next. That would most likely depend on the daily candle closure. I attribute a lot of importance to how the daily candle closes, so that would give me more information to see if we're indeed going to be tapping into this area and going lower, or we're going to be tapping into this area, maybe pulling back in the short term to test the higher fair value gap to then push lower. That could be another scenario where we grab swing high liquidity, tap into the fair value gap refinement, pull back to the origin of the impulse that we can see over here, and then see the target being met, or we could just spike lower, right? All of these are potential scenarios that we need to consider, and you need to remember that you need to do what's comfortable for you. I'm just sharing my thought process as I look at this pair, right? And we're just on the 4 hour. The lowest time frame that I will go for this strategy is the 1 hour, apart from going lower when I'm looking for a confirmation. But in terms of structure analysis, liquidity identification, POI selection, I will be going as low as the 1 hour. Anything below that becomes inaccurate for me, and it's not really relevant. So we have the breaker there that we could see. We also have the untested IFC structure here, although I wouldn't expect a great deal of respect in that area because we have the compelling liquidity pool with the daily bias potentially denoting that we're going to be pushing lower. And that's really the action that I see. I mean, we have an obvious trendline liquidity potentially starting to build there. We're also understanding the structure analysis. This is another structure point that is forming here. Let's see if we can make this work. Let me see if I can do this over here. So let's do green now. And this is another story that we could see potentially happening, which is where we would be open to taking both buys and sells, because we have a recent break in market structure higher. As you can see here, we have an internal complex pullback building here, building bearish order flow. Remember that we have mitigated bearish order flow into a higher time frame breaker, which is why we're more so thinking about taking this liquidity pool lower. So what I would want to do is maybe jump back into the daily, reset the chart, and make sure that I remember that this is where we lastly mitigated order flow. So this is the last point of true mitigation, which is a concept that I introduced to the forex community about 2.5, maybe even 3 years ago. So that is something that I would consider as a potential opportunity, right? This would have been ideal to short at. You have everything lining up, really. You have a breaker block here. You have a liquidity pool here. It doesn't get any better. Test the breaker, move back lower, create a new internal lower low, denote the swing point, complex pullback into the origin block, meltdown that we're now seeing. So as of now, I would be watching the zones that I've given you, right? We have all these areas that we're going to be looking at. Let's take a look at today's daily cycle. Today's daily cycle hasn't really done much. Looks like we're approaching ATR though, so this POI is really interesting to me because it's beyond ATR. It is a high time frame breaker. It's potentially in line with this complex bullish pullback that we're seeing, and we could very well see this being relevant for now. So this is an area to be looking for longs. This is a decision point that I really want to pay attention to. I would call this the decision block. So we would label it as such so we get a little bit more precision on that decision block. Maybe potentially turn this higher, because this is the area you really want to be watching for more information, because there's two options there. Either we're going to see the market test it and reject and go for the higher time frame liquidity pool, which by the way we're going to be denoting a little bit in a second now, or we're going to see the market pull back on the short term, move higher, maybe look to take this liquidity that is building up on the upside, although I do see that it has been taken there. Now mind you, I just entered this. Let me see if I can cancel it. There we go. Mind you, this is your most recent lower time frame leg. There is some importance to that, which is why we're looking at this area, but you want to mark the origin. This is an area where we could see potential trouble as well, so we need to make sure that we're paying attention to that. Let me quickly get rid of all of this so I can make the charts look a little bit prettier. We would be looking here as well. Once again, we don't go lower than the 1 hour, so that is why we're sticking to that. Hopefully that is making sense. And going back to the daily drawn liquidity, which is this low over here, we would make sure that we're making it as important as it needs to be, which is a little bit thicker. Change the way it looks, make sure that we're using the magnet, so we're placing the price point to where exactly it needs to be, and make sure that you're denoting it as such right there. So now we're a little bit more clear. Let's see over here, text alignment top. Well, it's not really showing up as of now, but that's okay. With the way the line looks, we know that this is a relevant area to be looking to do business at below it. Once we get below this area, guys, very important, we're going to be looking for an internal change in the state of delivery. Once we get 4 structural points pointing bullish, we're going to be looking for a pullback to go long, maybe even revisiting the origin of the leg that we see over there. So hopefully this was not too complicated. Let's take a quick look at the daily cycle over here. Today's daily cycle has really been a one-side liquidation model, as I can see. Hasn't really tested the midline, although there might have been a lower time frame POI there. Let's jump into the lower time frame. Really, this is a little bit off topic, but I'm just curious. We've tapped this naked wick over here. I see that is the reaction of the midline. Yeah, so this is pretty standard when we get a standard and one-sided liquidation model, but that's a topic for a different day. So hopefully you understand the ideas that I'm looking for. Remember that the eyes represent areas that I'm looking to do business at with confirmation. So once again, to summarize, potential shorts from this area, potential decision to be made at this decision block, and the obvious drawn liquidity that we're expecting for the market. Let's jump it quickly into the 4-hour, and hopefully this all made a bit of sense with the way we mapped out the markets, flick through the different time frames, and this is how I trade the markets every single day on my swing trading strategy.